I'm going to share with you some simple but effective day trading strategies that help me profit off of price action and market trends that also work extremely well to grow small accounts so that we can help get you to those first $5,000 to $10,000 trading months. So I'll use my experience to share with you a clear path to these effective trading strategies, show you all the tools and indicators that you'll need so that if you make it to the end, you'll have a framework to trading success. And I'll be saving the best strategy for last, but you're going to need everything in the video. So make sure that you don't skip ahead so that you don't miss anything. When we're trading any trading systems, we need to have a few things. We need to first have a thesis of the trade. So what we're generally trying to do. So are we trying to time a reversal point where we have a market move and the price is changing directions? Or are we trying to find a current move in the market, enter that current move, and then continue to follow it up as it goes? Second thing is, what are the tools required to be able to trade these systems? The third thing is, what is our trade criteria? So what are our signals to enter the market, exit the market, or not even get into the market at all? So for these systems today, we're going to be trading trend continuations, meaning we're identifying trends in the market and then trying to get into those at the proper time to be able to ride those trends up and capitalize on those moves. But first, we need to figure out how to properly identify a trend. So the first trait of a trend is going to be a higher high followed by a higher low, followed by another higher high and a secondary higher low. Same thing for downtrends. If we see a first lower low followed by a lower high, followed by a second lower low, we need to see this second lower high in order to confirm that we have a downtrend. Okay, the second thing that I'm using to identify whether a trend is a trend is if we have a break of structure. So if we have price movement down, rejecting off of one contact point, two contact point, hits off this level again, and then price breaks through this level, this can indicate the very beginning of a new trend. And this is something that we use a lot in our trading to be able to establish whether or not we have a potential new trend. And the third thing we're going to be using to confirm a trend are going to be moving averages. So if we have price action moving up like this, we can use multiple moving averages to confirm the overall strength and direction of a current trend. So in this video, we're going to be using a 20, 50, and 200 EMA, where this 200-day EMA is going to be measuring 200 days worth of price action, but it's going to be exponentially weighing the most recent price data. Same thing with the 50 EMA. This is going to be taking only 50 days of price action and exponentially weighing the most recent price action. And then the 20 is going to be the most reactive. So if we have a significant move up in the market, considering that the most recent price data is the highest, this 20-day EMA is going to move up a lot faster than the 200-day. So we're going to be using all of these EMAs together to find the general market trajectory. And we'll be using other tools and indicators along the way that I'm going to show you how to add to your chart and how to use them as we go through the systems. All right, so let's get into the first system, which is going to be the Fib and EMA Continuation strategy. First thing that we want to do with all of these systems is confirm a new trend. So we're going to use all of those identifiers that we just talked about. First thing is going to be our break of structure. So we have price reacting off of this level, again, down off of here, breaking up through this level, responding off the top of this, and then making a continuation. So we have a break of structure in here. Second thing that we're going to look for is a higher high, higher low, and higher low. That also is going to confirm that we have a new uptrend. All right, and the third thing that we're going to be doing is looking at our exponential moving averages. So you can see we have our 20-day EMA here, our 50 and our 200 all lined up on top of each other. That's going to be the third confirmation that we have a bullish trend. All right, if you want to add these to your chart, you can click into indicators and use moving average exponential right here. All right, but if you want to use the one that we're using in this video, in our Discord, we have a free resources and learning section. I'm going to be putting all of the discussed indicators into here where you can download those and add those to your trading view charts. The link to the Discord is in the description. We have all of our EMAs crossed here and lined up with the price action moving up. So the thesis of this trade is we're going to wait for the price action to come down and use Fibonacci levels to try to play the bounce in the continuation on the trend. So there's a few Fibonacci's that we like to use when we're doing this. So this is a standard Fibonacci where we have the beginning of our price action here. Anytime we're getting a big move up, we want to stretch from this low, put our 0 point up to the high of the price. And then as the price starts to trade back down, we're going to be looking at this 50 level and the 61.8 level, which is the golden Fibonacci ratio, which are oftentimes levels that the price likes to bounce off of and continue if we are going to get a continuation in the trend. Now, considering that we have break of structure, confirmation of our trend levels, as well as a cross in the moving averages, this is indicating that we could see some possible strength to the upside. Now it's just about timing our entries into this and to be able to position ourselves into the market to take advantage of that move. So once we have these moving averages crossed, we want to look at the most recent recent low before we saw the price trail through this and we saw our moving averages line up. Okay, another way that we're using fibs is starting from the high point here down to this low point over here and just leaving on our 0.382 level. That's going to be where we draw the end of our fib. So we're going to start from here down to that lowest point before we saw the moving averages cross. That's giving us the beginning of that most recent bullish trend. Then we just need to wait for the price to start settling off. So now we have a confirmed high. This is where we can start positioning ourselves to get into a trade. So if we're going to be looking at the 38.2 level as a potential entry zone, we want to start looking at other important parts of the chart to be able to position our stop loss strategically. A lot of people will just look at a fixed percentage and say, okay, if I need to have a 1 to 3 risk reward, I'll position my stop loss to give me that 1 to 3. As traders, what we want to do is position our stop loss around the chart rather than just throwing on a random stop loss. So we can see in this region, we got a significant amount of resistance, turned support, broke through, once again, support on that region. Okay, so what we'd want to do is position our stop loss outside of these key potential support areas so that we can increase the chance of our price action breaking off of those and then keeping us in the trade. Our take profit at this point is still to be determined. Okay, so you can see price comes down into this region at the 38.2 level and got a price bounce off of that exact zone. And the next thing that I like to look at to see where we could see potential overvalued and undervalued parts of price action is by looking at an RSI, and we made a custom cloud highlight RSI called the InnovaTrade Pro Plus indicator, which you could also find in the resources of the Discord. But this is essentially going to show us when the relative strength compared to the normal volatility of this instrument is up higher than usual. We'll get these highlight strips if it's above this 70 threshold and below the lower 30 threshold. So whenever you're seeing highlighted zones, there's a chance that the price could be in a zone where we could see it start to reverse back down. So in these situations, we did get a highlight down here where our candle sunk through our 38.2 level. So now essentially what we want to do is follow this price action and let it trend. All right, so now you can see we have a highlight strip while the price is pushed up significantly high. In situations where we're following trends, we can see the lows start to establish on this trend here. So in this instance, our stop loss is down here. Once we have a highlight in the up direction, we can reduce risk to underneath this most recent low, meaning that if the price action breaks this trend and comes down, we get out of the trade now for break even. So it's either we hit full profit or we take the trade off the table and don't lose anything if the trend breaks. For the take profit level, we can also allow the trend to continue to play out and use this Pro Plus indicator on a 15-minute frequency, so a 3x larger frequency than the 5-minute frequency, and wait for a highlight strip on there to play a larger continuation on the trend. So once again, we'll let this play out. We have our risk reduced to underneath this low, and you can see at this point, this is where we get our highlight strip. So as soon as we get that highlight strip, our first candle would be here and we would end up taking profit off of the table. So off of this trend continuation, we made a 4.5 risk reward, meaning that if initially this price came down through and hit this level, we're risking 1 risk factor. All right, we just made 4.5 risk factors by this going up and continuing in the trend and taking it off the table when the trend started to exhaust and could be in a potential area where we could see a reversal. Now, if we're risking say $25, $50, $100 on this position, that means that we're now making $450 on these trades. This means that now we can be wrong 4 times in a row after this trade and still be in the net positive. Because a lot of times what is going to happen is the price will come directly through here and stop you out. But as we unpack the next systems, we can actually start to be more selective about the trades that we're getting into and start eliminating a lot of those losses. Now we're back to a 5-minute frequency and we're going to see the price has now broken through these lows and these 20 and 50-day moving averages are starting to move over this lower 200-day moving average. This is going to indicate the potential that we have a new downtrend forming, so we can look for those levels to start getting into. If we go ahead and play this forward, right, we get a drop of that low. All right, at this point, now we have all of our moving averages on the same side. So you can see we have our 20, our 50, and our 200 all facing the same direction. Okay, we have a break of structure here, and you can see we have a low, a lower high, a lower low, and a lower high here. So now we have a confirmation that this is now our new potential downtrend. We're just looking for a region to start to get short into this zone to catch the reversal. A lot of people don't know this. You can make money in the market as it's moving down. Okay, so I'm going to show you how to do the same strategy, but on the opposite side of the market. And we want to find the most recent low when we have the moving averages cross over one another. So that's going to actually be this level. Okay, so we're going to start our Fibonacci from here and we're going to drag it to that high over here. And now we just need to wait for this price action to start to flip and come back up. Price is coming back up. This is where we can look to start positioning ourselves again. We can enter right in this 38.2 region. In this scenario, we can once again find important levels on the chart. We can see this was a major support turned resistance level. So resistance, support, support, all in this region. Once again, support broken through resistance. This is once again looking really good for a resistance zone. All right, we also have this important level. So high, high, broken up through here, broke through it, hit resistance. So ideally, we'd want to put our stop loss slightly outside important price action like this. Take profit once again is going to be determined. All right, so now we have the price action hitting our entry level, rejecting off of that level, and starting to break this fresh low, which is indicating a continuation of this downtrend. Here is really the low point of our overall trend. All right, and once again, we do have a highlight point on our 5 minutes. At this point, look to start reducing risk. Now, don't look to reduce risk to this entry level. Once again, we had this level confirm, and then it actually broke up through this level before it broke that low. So this is actually the low of the trend. So something that you can do is position your stop loss outside of that most recent price action. Okay, so I'm gonna leave that there. Notional new stop loss is there. So once again, we have our first highlight strip here on this candle, and we have our candle close here. So this trade here would have given us right around a 2.3 risk reward, depending on where we placed our stop loss. It's a little bit light. We usually like to keep it at a 1 to 3 risk reward, but still we're able to take advantage of this trend move down. All right, so let's talk about system number 2, which is going to be a very similar system, but now we're considering something called fair value gaps. This is going to allow us to be way more selective about the trades that we're actually getting into, but this is where we start to add up what are called confluences, which are going to increase the statistical probability of us being right about the trade and being able to take the right trades and eliminate taking some of those not so good trades. I'm going to walk you through what a fair value gap is as we're breaking down our chart. So once again, break of structure here, we definitely have a low, high, low, and then a new high. All right, on this most recent trend, we have our higher high, our higher low, higher high, and higher low here. So we have confirmation that is now a break of structure and a new uptrend. Okay, so once again, we're going to take this most recent low before we see this EMA crossover, and we can take our fib from this low up to this high here. All right, and as this price starts to turn around, we're going to start considering fair value gaps. So when we're looking for a fair value gap, we want to find a group of 3 candles where the high wick of the first candle doesn't overlap with the low wick of the third candle. This indicates that there may have been a bunch of buy side orders sitting through here, but because the demand pushed through that level so quickly, when the price comes back down to retest that, we can expect that there's a fair amount of buy side liquidity still sitting in these pockets, which can oftentimes be perfect reversal points paired with sort of other indicators that we're using. And we can start to read this on our charts too. We can see there's a lot of resistance where the price really couldn't break through this level. We had some wicks trying to go through it, and then all of a sudden we had a big momentum push. Now, this candle here was the first one to break through that level. So we have our high value here. Then this candle made its move up. The lowest point that this candle went was here. So in between this region would be our fair value gap. So what we're looking to do is have a fair value gap paired up with some of our Fibonacci retracement zones. This is going to be a potent area where we can see the price of the market start to turn around. So price forms a new high. We have to keep adjusting our fib before we see our low come all the way down. So I'm going to put my Fibonacci at that region. And now we can start to see even this Fibonacci is reacting really nicely off of that resistance level. All right, so we start to see price action breaking through this trend level here. So we can start to position ourselves long, take profit to be determined. Once again, we want to find critical levels to put our stop loss at. So here's going to be a major support zone. So anything outside of this zone should give us an opportunity to catch some sort of bounce before we start to reduce risk on the trend continuation. All right, so price comes down to our fair value gap perfectly off of our Fibonacci level there and starts to reverse back the other way. Okay, so here once again, we have our first highlight strip so we can look to start reducing risk on this trade. So here we have our first candle close at the first time we get a highlight on the 15-minute frequency. So once again, this is 7 risk factors in the bank. So you can be wrong 7 more times and still be break even on your account. This is what we're starting to do once we start compounding these bigger trades. And that's where we want to be as traders. We want to have a lot of these risk factors in the bank so we can keep focusing on the process, focusing on taking those good, high quality, high conviction setups. So let's take a look at another example. So we have our downtrend, fresh price action with overlapping 2050, 200, 200 exponential moving average, higher high, higher low, higher high, higher low, confirmation on a new uptrend. So now we want to find this temporary high down to our most recent low here before we got our moving average flip. Price starts to roll over here. This is where we want to start finding our fair value gaps on this uptrend. Okay, so we can look over these overlaps here. We have candlestick high here with our close there. So we have one fair value gap here, and we also have another fair value gap from the high of this candle to the wick in here. So we can click from here to the low of that wick right in there. So we essentially have two back-to-back fair value gaps lining up perfectly with our 0.382 level. So now we can wait for this price to start coming down. We're starting to get close. All right, position ourselves to get long on that 38.2 level. Price comes through, tests our fair value gap, and then immediately gets a nice move up. Now there's something interesting to be said about this fair value gap. So there's a dotted line in the middle of our fair value gap, and this level is called our consequential encroachment, meaning that if we get a candlestick to close past this halfway point, oftentimes this fair value gap is going to get negated. So a lot of times you can even exit the trade if the fair value gap is disrespected and take a small contained loss. You can see in this situation, we had the wick go through it, but the body of the candle is closing on this half of the consequential encroachment line. Once again, we see our candle wick down through this half point, but we are getting solid closes, responding really nicely to not only our fib level, but that previous area where we probably have a lot of buy side liquidity left over that is soaking up all of those orders and reversing the price, which if this is going to be a continuation of a trend, can allow that trend to continue moving forward. And now we're long and we're just going to ride the trend out until it's exhausted with the RSI, and then we can look to start taking profits. All right, so at this point, we are getting our highlight on our 5 minutes. So if we want to, we can go ahead and reduce risk underneath this low, switch over to our 15-minute and see where the market is going to let us play this trend out. So here's actually where we got our first highlight at the top of this candle. So we would have closed out right here, and this would have given us another about 4.5 risk factors on this trade. All the resources that you need to be able to add these indicators to your chart and start taking these types of trades are going to be in the resources section below. This is going to give you some details on the trade alerts that we're going to be sending out so that you can get involved. Okay, we have a whole public chat resources section and a place for everybody to hang out, start connecting, and start working on trading development. All right, system number 3 is going to be called the unicorn continuation strategy. Now, we joke around about this on the private side of our trading team. When we find unicorn setups, we have all of our extra trade confluences all saying yes on one single trade, which means that this setup is a very rare find and has a high probability of going in our trade direction. All right, so once again, we have our break of structure. We have a higher high, a higher low, a higher high, and a higher low, confirming that we now do have this overall new uptrend. Okay, so once again, we can use a Fibonacci from the top, the most recent low before our EMA cross. Okay, notice how we did get some crosses in here, so that doesn't count anymore. We now need to go to the most recent low before we do get that full crossover. All right, so price starts selling off. We know where our Fibonacci level is, so now we just want to see if there is a fair value gap right where our Fibonacci level is sitting. There's a really important price zone right in here where the price breaks through a ton. Now we have this price now coming down and being retested. So our fair value gap is going to be from the high of this wick here to the low of this wick over here. All right, and the reason this is called a unicorn setup is because we literally have the consequential encroachment line matching up perfectly with our 200-day EMA. Now you can do this with other systems and other frequency exponential moving averages. Okay, on longer term frequencies, a lot of investors will use the 200-day simple moving average to determine the overall health of larger investment instruments. Okay, moving averages can't be a leading indicator. You can't trade off of moving averages because it's a reactive indicator. But we can use these with our technical analysis and our rule-based systems to start to find strong enough trends to then try to trade. Okay, and that's what these are going to be helpful with. Now, oftentimes this lower moving average, just like on the investing front, is going to be a similar support area. So if we have this 200-day inside the fair value gap right at the same Fibonacci level, these are such important bounce levels. We can watch prices starting to come down. We can look for an entry right on this fib level here, take profit to be determined. Okay, once again, if this is going to be our potential lowest support zone down here, we just want to have our stop loss placed safely underneath all of these important levels. All right, price comes down. Once again, reacts off of that consequential encroachment line, dips through it. Notice how we didn't get a close below this level before we saw a nice response up. Price is coming up. Now we can wait for our highlight strip to start reducing risk. Okay, so there we have our first highlight. This is where we can reduce risk. Now, it's important to mention, once again, I'm just gonna nail this into people's head because I've made this mistake a lot, and this is something that I see with a lot of people. Don't reduce risk to the entry unless you literally bottom tick the price. In this case, we see the wicks go through here, so give it some breathing room. Let this be your bottom. We're still trading this as an overall trend, right? These are the lows that we want to pay attention to, right? So if the price comes through and invalidates this, there's a chance that we will lose the trend, but this is our last level before we get a confirmation that this new downtrend is a new downtrend. This is why we pay attention to these trend levels. If we have a move down with a lower low, a lower high, we next need a lower low. We can't have a downtrend without that confirmation. That's one of our rules. So we don't want to put our stop loss inside this because this still could be an uptrend if it hasn't broken and made a lower low. All right, so we can place our stop loss somewhere inside there. All right, price is moving up nicely. You can see it's reacting off of that temporary trend, and then it breaks below that trend. Catches support once again on that 200-day. And then we do get that big break in price action. Okay, notice how it comes and tests once again this fair value gap. Is there still leftover liquidity that's going to hold this trend up, or are we going to be taken out of the trade because the trend is going to reverse? At this point, we didn't get a close past the consequential encroachment line. All right, so now we are getting the move up in price action. And we can see here's where we get our first highlight and our first candle close right at this high level here, which is going to give us another about 6.5 risk reward on this trade. Let's take a look at another example. We have a break of structure here, higher high, higher low, higher high, higher low, confirming this new uptrend here. We grab our fib off of that level down to our most recent low, which is going to be this low. All right, now we just need the price to make a high and start coming around. This looks like a good high to me. We start to see our 200 exponential moving average sort of hanging out where our 38.2 level or our 61.8 level of our fib is. Okay, we can see from this candle here, we had a big push up in price action. This is an important level. Once again, resistance, got a big break in candles, breaking through these wicks. That's going to oftentimes indicate that fair value gap. So once again, we can go into here, from here, draw out our first fair value gap. And you can see this is once again sitting right where our Fibonacci level is. Okay, so we can go ahead and look, set up a long right in this region, stop loss safely. In this situation, I see a lot of support in this region. So if it breaks this, it's probably not going to last. So I want to be outside this region. So if it does hold off of this, we're still going to be able to stay in this trade. Okay, once again, positioning our stop loss on important parts of the chart. Our price comes down, breaks through our fair value gap in our entry, but we did give ourselves enough space. So then this trade reverses. All right, here we get our highlights so we can start reducing risk underneath this level here if we wanted to. Even if we were being courteous with our stop loss, would give us a solid 1-5, 1-6 risk reward ratio. So if we had one trade with a 1-2, we had one trade with a 1-5, 1-7, say we're looking at about 12 risk factors on a few trades. Say we took 10 total trades where we lost 7 of those for -1 risk factor. And say of the 3 winning trades, even we made a 1-3 risk reward. So we're being really careful with our stop loss and really letting these trades play out. That would be 3 times 3, which would give us 9 positive risk factors. So out of those 10 trades, we'd still be up 2 risk factors, being wrong 70% of the time. This is something that most people don't understand about trading. As long as you're really letting these trends play out and you're allowing your systems to really show your edge, and you stay disciplined to these systems, okay, you can have a 70% lose rate and still be able to come out with a profitable system. Because the truth is, even if we're using all of these systems properly, a lot of the trades are still going to lose, and that's okay. And that's why as traders, we need to be tracking our own performance, analyzing our habits, making sure that we're finding the best setups for us. And that's once again why we have our Discord community. There's a group of people with a public chat where everyone is working on their trading, discussing and networking. We also have an entire education and private trading team where we're really diving a lot further into these concepts. And we have an entire team space to work on projects, work on system development. We have a lot of amazing things going on, and moving out into the rest of the year, we're going to continue to be developing. So if you're interested in the trading, use the free Discord, head in there, start looking at some of the alerts that we're putting out, start networking with people and start putting yourself around like-minded people. But anyways, guys, I hope this video was helpful. If you're still here with me, put in the comments which system was your favorite and why. Make sure you hit the like button, subscribe to the channel if you like trading and investing and you want to know when the next videos are coming out. That's basically all I have for today, guys. Until next time, I will see you all in the next video.